Inflation eased for the seventh straight month in January, helped by lower costs for used vehicles and offering some relief to consumers struggling with high prices over the past year. Consumer Price Index, CPI, data released on Tuesday showed that prices for a range of goods and services rose by 6.4% over the past 12 months, down slightly from an annual rate of 6.5% in December and a 40-year high of 9.1% in June. On a month-by-month basis, however, prices increased by 0.5% in January compared with a slower gain of 0.1% in December. The acceleration was driven by shelter costs. Americans have been struggling with soaring prices since last year, resulting in a decline in the real value of their income despite historic wage increases. High inflation has also amplified the risk of a recession. The inflation data follows last month's surprisingly strong labor report, which showed that employers added 517,000 jobs, well above expectations and raising concerns that the economy remains too hot and could keep prices at elevated levels too long. The latest CPI news underscores the challenges faced by the Fed, said John Lear, chief economist at Morning Consult. Inflation may have peaked, but it's not showing signs of rapidly returning to the Fed's 2% inflation target. To get there, the Fed will likely have to continue hiking rates higher and longer than many anticipated. The Fed may not need to continue rate hikes, easing recession risk. Core CPI, a measure of inflation that strips away volatile food and energy prices, rose by 0.4% for the second month in a row. That put the annual core CPI inflation rate at 5.6%. Rising shelter costs were the biggest contributor to rising inflation last month and year, accounting for half of the 0.5% monthly increase in prices and 60% of the 6.4% annual inflation rate, the Labor Department said. Shelter costs rose by 0.7% last month and are up 7.9% from a year ago,